gold goes up by 14%. Bitcoin has a 8.95 sensitivity, which means for every 10% rise in liquidity, that Bitcoin goes up by 90%. So for every 10% raise in liquidity, S&P 500 goes up by 10%, but Bitcoin goes up by 90%.
One of the central themes in Moss's analysis is the sensitivity of Bitcoin to global liquidity. According to Moss, the performance of financial assets like the S&P 500 and gold are heavily influenced by changes in global liquidity. The S&P 500 tends to move in line with global liquidity, meaning a 10% rise in liquidity typically results in a 10% increase in the index's value. Gold, with a sensitivity ratio of 1.49, moves up 14% for every 10% rise in liquidity. However, Bitcoin exhibits an extraordinary sensitivity of 8.95, meaning that for every 10% rise in liquidity, Bitcoin's value could potentially increase by 90%. Moss argues that Bitcoin's future growth could be at least double the rate of the S&P 500, given its current sensitivity ratio. He suggests that even a conservative estimate could see Bitcoin outpacing traditional assets significantly, making it a compelling investment option for those looking to hedge against inflation or currency devaluation. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin has averaged a 150% compounded annual growth rate. We don't believe that's going to continue moving forward. So what will it continue moving forward? And that's how we got sort of the three cases. Basically, the bear case is that it moves up faster than the S&P 500. I think it moves up at twice the rate. Now, is that reasonable to think that it could move at twice the rate of the S&P 500? Well, pretty much any of the big tech companies do. So, I mean, that's one case. We also know that, as I mentioned earlier about houses and the S&P 500 moving up at the rate of global liquidity. So we know that the S&P 500 basically moves up exactly like the global liquidity. However, gold has a sensitivity ratio of 1.49. So that means gold moves up for every 10% rise in liquidity, gold goes up by 14%. Bitcoin has a 8.95 sensitivity, which means for every 10% rise in liquidity, that Bitcoin goes up by 90%. So for every 10% raise in liquidity, S&P 500 goes up by 10%. But Bitcoin goes up by 90%. So his bear case was that it would just double the performance of the S&P 500, which I think is way too extremely bearish, in my opinion. So then we just predict, I mean, we can look at the Congressional Budget Office, the CBO projects what they think the debt levels and the deficit levels will be by 2050. Saylor, I think said 2045, which is 21 years for the 21 million Bitcoin. But we can just see what the CBO projects for the debt levels and the deficit levels to be by 2050. And if Bitcoin continues to move at a sensitivity ratio, at least of 2 times the S&P 500, right now it's at 9, then we will easily surpass Michael Saylor's numbers. I think it moves even faster than that, but I don't think when you break down the math, it's not that crazy. Now, if you wanted to use that same number, how much are the median U.S. homes in 2045? Right. How much is a gallon of gas in 2045? And a lot of people are going to be very shocked if they do that math. I think 2024, the end of this cycle, I think it should be somewhere in the 100 to 150,000 range based off of where we're at. However, if Trump were to win and enact those policies, I think we get to the upper range of that, which could be 400,000. So we'll know that obviously by November. Things could drastically change. If the Harris administration wins, then we might undershoot that target. So I think all eyes are going to be what happens with this election. If Harris comes in, it could be, again, underwhelming that number. It could be extremely bearish. And if Trump wins or FK wins, it would be extremely bullish. So I think somewhere in that 100,000 to 400,000 range, as I know that's a big number. But I think we'll have to wait and see what happens with the election. Longer term, though, I think, I talk about often that, it's very unclear in the short term. It's much clearer when you think about the long term. So I would say that, I think $1 million Bitcoin by 2030 is in play. That's 2 more cycles, basically. We'll finish this cycle plus 1 more 4-year cycle. I think that number's in play specifically when you look at what's expected to happen with global liquidity and the sensitivity ratio that Bitcoin moves on that global liquidity.
A recurring theme in Moss's analysis is the concept of freedom of choice and financial sovereignty. He argues that Bitcoin represents a unique opportunity for individuals to maintain control over their wealth in a world where traditional financial assets are often subject to regulation and control by governments and financial institutions. Moss highlights that in a debt-based monetary system, individuals do not truly own their money, stocks, or even their homes outright. In contrast, Bitcoin offers a form of ownership that is not dependent on any central authority or intermediary. This focus on freedom resonates with a broader political debate about the role of government in individuals' financial lives. Moss suggests that the decision to support or oppose Bitcoin is ultimately a decision about whether individuals should have the right to control their wealth and financial future.
I think part of the reason why there's such a big divide in this country, and I hate to use big platitudes and stereotypes, but we have one group of people who just want to live and let live. Let me do me. Let me focus on my family and my business. Let me do me and you do you. You want to be whatever you want to be, like, cool, good luck. But there's another side that wants to tell us what to do. And so we'll never agree. Like, there's no way those two sides can agree. Like, you want to have purple hair and whatever, like, cool for you. And like, I'm going to do this, like, cool for me. And like, go do you, I do me. And like, we can still be friends. But when you want to force your ideology on me, we'll never reconcile that. And so that kind of goes back to what's on the ballot, right? If Trump maybe doesn't understand Bitcoin, but he's for freedom, which is you should be free to save your money in whatever you want. You want to save your money in Beanie Babies or pet rocks? Cool, go for it. I might think that's stupid, and I have the right to say it's stupid, but I shouldn't make it illegal for you to do that. That's Trump's position. But unfortunately, the other side of the aisle is saying, no. You do not have the right to own any assets. You do not have the right to store your wealth in a way that you want. We will tell you. We are the arbiter of truth, and that's what's really at the ballot. Forget Bitcoin for a second and just think about really what they're saying. Do we or don't we have the right to save our own wealth, our own private property in whatever we choose? That's what's at the ballot. And hopefully, my hope is that people can sort of put the political ideology behind and also the Bitcoin issue and just look at the greater, bigger thing, right? Do we have the right to store our wealth? Now, unfortunately, Michelle, back to being a debt-based monetary system, we aren't really allowed to own anything in a debt-based monetary system. So the money in the bank legally is not your money. That money is owed to you. Your stocks that you think you own, your Apple, Google, Tesla, you don't actually own those. Legally, your broker owes them to you. Your house that you've paid off, you don't really own that. You have to pay monthly to the county assessor or they take that from you. And so Bitcoin is sort of that last thing that we can own. And I think that's part of why it's the attack vector. But it really comes down to freedom of choice. You may think Bitcoin is the stupidest thing in the world, and that's perfectly fine. But why would you make it illegal for me to want to own it?
In conclusion, Mark Moss presents a compelling case for Bitcoin's continued growth, driven by its high sensitivity to global liquidity, increasing demand for an alternative store of value, and the ongoing debate over financial freedom and sovereignty. While the short-term outlook for Bitcoin may be influenced by political dynamics and market conditions, the long-term potential for the cryptocurrency remains significant. As Moss suggests, Bitcoin could reach $1 million by 2030, providing investors with a unique opportunity to participate in the evolution of the global financial system. Regardless of one's stance on Bitcoin, the broader questions Moss raises about financial freedom, ownership, and control are likely to remain relevant for years to come. As the world continues to grapple with these issues, Bitcoin and other decentralized assets will undoubtedly play a central role in shaping the future of money. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you. See you in the next video.